Hello, hello. PayPal just crashed really hard, down nearly 20% as the CEO exits, basically getting fired with disappointing 2026 profit forecast. But the stock price right now is insane. It looks like a steal pretty much, but we're going to examine that later. For now, let's take a look at what happened. PayPal replaced the CEO Alex Chris, who was brought in to steer the payments, didn't do really well here as they issued a lackluster profit forecast for 2026, and they named Enrique Lores as the new president and CEO. Now he was tasked with turning around PayPal. Didn't really happen. Didn't do well. Now the big problem for the company is the dim outlook, the guidance, what's going to be happening in the future, where they expected about an 8% growth, but now they're saying there could be a slight increase or even a slight decline here. So they are looking to be sideways pretty much in terms of growth, which is obviously not what the investors and the analysts were thinking about the company. Now they said that they will no longer be committing to outlooks in the investors' day, pretty much. So this is not going to be happening anymore. The change happens against the backdrop of weakening retail spending. That's what they are saying is a big deal here. The elevated interest rates squeezing customers here, stubbornly high living costs, and signs of a softening labor markets. Pressure across the retail merchant portfolio is what they are saying here. As PayPal reported 8.68 billion for the holiday quarter, missing the estimate of 8.80 billion. An adjusted profit, the APS, was 1.23 per share during the 3 months with expectations of 1.28. So not a massive decline here, but still a decline. Now the branded checkout is a thing that went south for the company. As you'll see, growing PayPal's higher margin branded checkout business has been a key focus for outgoing CEO, but decelerated actually growth to 1% in the fourth quarter compared to 6% a year earlier. So weakness in US retail, international headwinds, and tougher comparisons. So this is what's going on with the company, but because the stock was already going down a lot and there was very bad sentiment for the company, it's very normal to see this kind of drop here, this amazing drop of like 20%, setting up for what could be potentially an amazing buy for the future because, we are not really scared of these things because they potentially lay the ground for what's going to happen in the future. We do want cheaper prices, and this is a case of a P ratio of 8. And remember, the company is not bankrupting or anything. They are just going sideways, like they are losing a little bit of growth. This could be just for a year, and then the next year or next 2 years, they have elevated growth as well. So, this is not something that basically destroys the company, but it destroys the value of the stock, and it's actually pretty good for people who want to enter the stock, is the thing. The P ratio of 8 right now, as the stock price is going down, this is basically trading like your neighbor's supermarket, pretty much, your neighborhood supermarket. So outstanding shares have been going down because the company has been buying. We talked about this in a previous video, but the price to free cash flow also at 7 right now, absolutely tremendous. And the company doesn't really have a lot of debt. The debt is about the liabilities that they have from the buy now pay later pretty much programs. I've talked about it in much detail. But what I want you to see is that the company has been doing really well through the years and the quarters. And if you take a look at the previous quarters, you will see that there has been growth that was a little bit lackluster, like 6%, 1%, sometimes negative, and this is what caused the company to drop. But if you take it to the annual, you will see that the company's growth has been stalling a little bit from what it used to be in the previous years, because it used to be like 17%, 20%. Now it's 8%, 6%, 3% the last 12 months, and you may see even like 3, 4% for the next year. It looks like if if projections come to play, even less potentially. But the thing is, this is setting up for a play for the years for somebody who wants to invest. And again, you have to recognize that the company is still making very solid revenue. Like they haven't dropped in revenue, and they are making a ton of operating income. They're making a ton of net income. It's like no actual money is being lost for the company. Is the thing. yet it's being punished because of the sentiment and because of missing just a few quarters among a stock that used to be the darling of Wall Street and was also super high in terms of the P ratio. You can see it here. And this is always like a rubber band. It comes up and down and up and down. It's a very regular thing for stocks. And this is a case, in my opinion, where this is a super buy, frankly. Like, yeah, it's just insanely valuable here in terms of the stock price. And can it come down more? Yes, it can. But for an investor who doesn't care and wants to hold through the years, I could easily see these like more than tripling or so at some point easily. That's what I think. I mean, there's still tremendous value, and I don't think that the company is going to go that south that they're not going to be making money anymore. Like that's not even near any scenario that is even plausible here. The company's financials, even the margins here have been like about the same. It's not like they have trouble with their earnings quality or the free cash flow. There's not much here, and even the debt coverage again, as I mentioned, is about the buy now pay later. So stock compensation is not a big deal for the company. No big deal with goodwill. All of these financials here are just and the Altman Z that you see 2.808 here is because of the buy now pay later, because the company acts like a bank sort of. And this is why it's a gray zone supposedly, but this is not accurate for a company like PayPal, and I'm actually saying it here. Limited relevance for payment processors, obviously. So yeah, but yeah, everything points to pretty solid numbers, and I'm gonna be examining the quarter when it comes out in SEC, when the actual report is out, because right now we only have the press conference pretty much. But when the report is out, I will probably make a video and explain PayPal in detail based on what we saw on that latest quarter, because I think the people are going to be interested about it. Do let me know, guys, what you think about the company. To me, this is basically sort of like a present, frankly. Like, could never have expected it to be that low based on what it's doing, of course. So yeah, tell me what you think. Give me your opinions below. Are you buying or are you avoiding it? What do you think about the company? Leave a comment. I'd like to hear your opinions, guys. This is pretty solid, pretty important here. Thanks for watching. Bye.